everybody for being on the call today with Phil Schreiber, CPA of Schreiber Advisors. Phil runs an accounting and CPA firm in the Detroit, Michigan area, and one of the topics that we get a lot of calls and questions about is how to attack the bookkeeping and accounting aspects of running your small business, and Phil is going to talk about that today. And I guess maybe we can start off by saying that businesses obviously need to keep accurate accounting and bookkeeping records so that not only that they can submit taxes to the IRS, but more importantly so they can operate and run their business efficiently, effectively, and make good business decisions. And so whether you're a startup company or an existing business, there are generally three different ways or strategies the owner or entrepreneur can use to handle their bookkeeping or accounting. And so that's what we're going to talk about today. So, Phil, good morning and welcome to the call.
Good morning to you.
And let's just dive right in. Maybe the best place to start is that the very first way, if you're a business owner, and maybe a lot of businesses start off this way, is that they start off by doing their own accounting or bookkeeping. So can you talk a little bit about how you've worked with business owners and maybe some of the pros and the cons of doing your accounting and bookkeeping yourself?
Sure. Well, first, it's typically when you're in business for yourself and you've got a small operation, say 5, 10 employees, the accounting becomes something that you do in the middle of the night, and the owner ends up having to do it, and it becomes a real stressful part of the operation. And typically, then what happens is it gets put off, and unfortunately, then what happens is the operator of the business doesn't get the benefit of seeing accurate data being put in front of them timely, so that he can react to the operational issues, positive or negative. And so that's one of the ways that typically owners handle the accounting work of their business, is they try to do it themselves. The whole trick to staying in business, it really comes down to a number of things, but one of the most important things is having your financial data in front of you and having it done accurately and timely.
Great. The
reason for that is if for some reason you have a bad month and then you think you had a good month after that, well, you're kind of playing all of this off of your memory as to what you think is going on based on cash position, typically. Cash position and accounts payables. And your receivable balances. And it's all in your head. Well, without it in a financial statement, you really don't know the extent of your loss and or profit. You're guessing. And if it happens to be that it was a bad month, if you find out that it was a bad month and then the following month was another not so bad month, so you're thinking things are cleaning up, but you're still digging a hole in terms of losses, if you finally get a financial statement, say 6 months from now, and when that statement's done, what typically happens is you find out you have, as an example, a $200,000 loss so far this year. And you've done nothing to, at that point, to mitigate the bleeding. And so now you got a $200,000 hole. Whereas had you had financial statements done timely and accurately every month, if you would have had a financial statement the first month you had a problem, and let's say you lost $50,000 that month. Well, if you had that in front of you, you could then plan on what do I need to do to fix this so it doesn't get bigger, as opposed to having it become a surprise 6 months later and have the hole be too big for you to deal with.
All right.
that is, in effect, why businesses go out of business. It's not because they don't have enough business. It's because they aren't reacting to the numbers quick enough so as to keep the P&L in order. And if an owner can learn that, then there's a good chance he'll be in business for a long time. The next phase would be for them to say, well, heck, I got to hire somebody. And so they go out and find somebody that they think they can work with, and they've done accounting before, and they're going to do bookkeeping, and now they've got to deal with setting up payroll and having this person do the accounting. And what happens there many times is that person starts getting pulled into the other areas of the operation because that's where the needs are. And again, the accounting work gets pushed aside and dealt with almost like something that I have to do, and sooner or later, as opposed to having it being looked at as something that's vital to the operation and the owner's ability to operate the company.
So is it safe to say, back to the first example of where the business owner does it themselves, that if they have a special skill or ability, maybe it's they're the top salesperson, pulling in the business, or they're organizing and running the operations, they're the key person on that when they do the bookkeeping themselves, that takes them literally away from being where they're most effective at, and that's probably a negative for them in terms of growing the business.
Yes, it's absolutely what happens. And then they wake up the next morning exhausted.
Right.
And you can't, they're not thinking properly, and so it's just not something that any business owner should be doing. Even my practice, I don't do my own books and records because it's not what my job is here. My job is to run the operation, and I do so with the numbers and what they're showing me. So,
and maybe even the business owner thinks short-sightedly that they're saving some money when they do it themselves, right?
Yes, it's the old acronym when you get somebody who wants to save on payroll, so they hire cheap. And what happens when you hire cheap or inexpensive, or hire somebody that really doesn't know what to do and hoping that they'll grow into it or they'll figure it out, or one of those scenarios, what ends up happening is the owner starts putting out fires of the person that they hired that was supposed to do the job, that he now has to come in and correct the work of what was being done. And so it ends up not working at all, thinking that you were hiring somebody to take you away from this effort. In effect, you hired cheap, and it brought you back into it because you end up putting out fires that this person created because the person you hired really didn't know what they were doing.
The old "you get what you pay for," right?
Yes.
Right.
Exactly.
And then you mentioned on the second scenario that they get to a certain size, and so that they hire a bookkeeper or an accountant internally. In your experience, what's the longevity of those kinds of folks in that type of environment? Do they tend to stay there forever, or is there turnover for the business owner that they have to deal with?
Over the years, I've looked at many resumes, and I find probably maybe 10% of the resumes that come in are from people wherein they've stayed at their jobs more than 5 years, a job. Everybody else, 90% of the people, for whatever reason, start a job and leave the job within 2 years.
Wow.
And if you go through as many resumes as we go through, and part of my job is to keep staff going so as to support our client base. You find that most of the resumes are from people that really haven't stayed in their jobs. Now, they all have very good excuses for that, but the ones that stand out are the ones where an individual had worked for a company for 5 or 6 or even 10 years and then had left. Now, if you talk to that type of an individual, there usually is a pretty good reason why they no longer work there. And so it's very hard to find people like that. It takes a pretty big effort, an effort that business owners don't have time for. So it becomes our job in supporting the accounting department and really the company of our clients to find these people and find people that actually fit into the culture of the business, as well as being able to accomplish the goals of what they're being hired for.
So you're saying, as in maybe we're kind of jumping to the third scenario, that if a firm hires you for their accounting and bookkeeping, that you actually provide that as a service. You look at resumes and help them hire people depending upon the level of support that they need?
No, what happens is I hire the accountants myself. And for me to hire the right people, I have to go through a lot of resumes. Gotcha. So I hire the accountant, and that accountant then internally to our staff becomes a support staff to our client. They then hire us to do their accounting work. They, in effect, outsource their accounting department to us.
And back to the second scenario, if somebody's there for, let's say, the 90% are there with the 2 years, do they tend to do a decent job in terms of staying up to date on all the different tax changes, or do they actually, I guess that they would take that knowledge with them to the new employee?
Yeah, many times what happens, Jeff, is the business owner likes to hire inexpensively as possible. Everybody does. Well, the person that doesn't have a job will take any job. And so what they take your job that you're going to pay for $15 or $20 an hour, and then they stay there for 6 months, learn, retrain their skills or refine their skills, and then start looking for another job, looking for $25 or $30 an hour, and they'll find it. So that's the revolving door that ends up going. Now, when you outsource your accounting department, you don't have that problem. You simply don't have to retrain anybody.
And I guess in the Detroit area, what's maybe you mentioned this, the going rate on average for an hourly or an annual pay for a decent bookkeeper or an accountant, if they're going to hire internally?
If they're going to hire internally, they're looking at somewhere between $20, $25 an hour, plus benefits. And I really am not sure, and quite frankly, nobody is sure, where this Obamacare thing is taking everybody on the benefit side. So if you're looking to hire somebody under 29 and a half hours, you better make sure that you don't let them work past that, because the IRS will be contacting you after that person does their tax return and asking why you haven't covered them on the medical side. Now, things could change, and things will change, let me put it that way.
Right.
But it's another issue that business owners have to deal with when they hire.
Great. Now, let's move on to the third option, which is outsourcing it, that aspect of it to a firm like you. What are the pros and the cons, even though we've covered a couple, that the entrepreneur benefits from, in your opinion, having somebody like you handle the bookkeeping and the accounting?
Well, the pros are, we've mentioned a few of them already. You really don't have a turnover You don't have the administration of that individual. You are getting someone who actually knows the job, and then some. You're only paying for that person as the need arrives.
Mm-hmm.
If you think that you need an accountant but can only keep him busy for 30 hours a week, well, it's going to be very hard to find somebody to just hire 30 hours per week. Most people want a full-time job.
Right.
So you'll end up hiring a full-time person and only using them part of the time. Personality issues, personal issues, family or whatever that person has. Anytime you hire an individual or hire people, you hire their personal issues that you aren't really sure of when you hire that person. So that becomes our problem. And we make it sure that when we come out to your place of business that you don't see any of that. We just get there, do our work, and ask if there's anything else we can help with, and then come back. And then just bill you for what your need was. Disadvantages would be it's a little more costly in hard dollars. Our rate is not what you would hire somebody in terms of per hour, $20, $25 an hour. Our rate is higher than that. But over the month's period, you'll end up spending less if you outsourced because you won't be using us full amount of the time. You'll get better reports. What other kind of disadvantages can you have?
Can we talk a little bit about are there software disadvantages?
Sure.
Trying to run internally or versus using you.
Well, again, that's more of an advantage than a disadvantage. It's
okay.
Not QuickBooks. QuickBooks is the biggest accounting package for small business out there. There are a lot of people that know QuickBooks, or they say they know QuickBooks. Most of the time, those people, when they're hired by a small business, know pretty much what they need to know, but they spend a lot of time, more than likely, with their CPA firm, asking questions about how to do this or how to book that or how to take this off the system or whatever the case would be. We're experts in the accounting software, so we don't have that downtime. You won't have the need to buy the software anymore. We buy it for you and don't charge you for it. We're in the cloud, and what that basically means is you can go on the internet, go to our website, sign in, and your accounting package and your accounting system is sitting right there as if it was sitting on your desk. And so you just do what you review it, you do what you want to do with it, you give me a call and you talk about the numbers, and we review what you want to review, and you close the window and you move on to what your next move is going to be that day. And while I'm talking to you, I'm still trying to think of what it is. What is a downside here? I guess if you need to talk to somebody personally in the morning, shake their hand or give them a cup of coffee, say how you doing, you're not going to get that.
Right.
You're going to get that when we show up to your office on a pre-scheduled time frame, but it's not that personal.
Phil, I know you run into this probably dozens of times each year, but could you give us a quick example of maybe where somebody's got an accounting department, bookkeeping folks or staff, and they ask you to come in and take a peek, and what you found and how you were able to help them?
There was a client that we had for a long time, and they had a bookkeeper that they used for a long time. This lady had been with the company for quite some time. And she was doing a fairly good job, but what I didn't see sitting in my office was that the workload she had, she would drag everything out, and she would basically duplicate all of the effort, so it made it look like she was busy at the client's office.
Mm-hmm.
And over the years, it's a very nice lady. She would just send us the financial statement, and we were just hired to review the financial statement and make sure it was accurate. We were never involved in having to analyze the accounting department's efficiencies. And when they finally gave us a call and said, Phil, can you come out and see what you can do about streamlining what we're doing in the accounting department? What I found was you really didn't need an accounting department. We were able to basically lay off 2 of the accounting people, and for a fraction of the cost, we would go out there once a week and do what 2 people did all week long.
Wow.
Yeah, because there was we got right to what was supposed to be accomplished, and there was no dragging things out. And they were, over time, when you have an employee for that long, you tend to increase their salaries way above what they're typically worth. And they were paying these people, in the area of $50,000-$60,000 a year, just because they had been with them for so long. Well, and the owner was of the mind that, they had been with me for so long, I wanted to keep them in place and blah, blah, blah. And I see that a lot, and I understand that. But he needs to know it's costing him money. In this case, it cost him $70,000, $80,000 a year.
And so when you help them make the change, then that money actually just probably drops
right
to the bottom line.
Right. So, a month later, after he makes his decision and we're out there, he just calls me up and says, Phil, why didn't you hit me over the head a few times and tell me to do this 5 years ago? And, I said, John, what can I do? I can only advise you. You can lead the horse to water, but you can't make him drink it.
And Phil, if somebody's listening to you, maybe they're in a similar situation. They've had an accounting department or somebody or a couple people there for years. They think things are going well, but they maybe just want somebody to look over their shoulder and give them a second opinion. Are you able to do that, and how would they go about getting a hold of you?
We are able to do that, and they would just go to our website or just give me a call, and we'll be glad to set something up and help you evaluate your operation. And typically the approach we take is so as to not have an open check situation, because when you get hired into a consulting arrangement like that, you really have no idea what you're walking into. And so therefore you don't know if it's a highly efficient, well-run operation or if it's just the opposite, or if it's just somewhere in between. And so what we do is we give them a free 4 hours of analysis on the operation initially. That 4 hours allows us to get our hands around what we need to get our hands around so as to then provide some initial advice. And in that initial advice, what we typically say is you either have or don't have, but you typically have some issues that we think we might want to address, and we prioritize them. And then we go after the biggest issue that we think you ought to address quickly because it may be losing you a lot of money right now. And we put another 4 hours on that effort. Now, we do this 4-hour increment at our hourly rate so that there isn't an open checkbook scenario. So that in another 4 hours, we'll be able to come back to you and say, okay, we now know more information, and here's really where we're at. And for us to correct this, we now know it's going to take another 8 to 10 hours to accomplish the goal of making sure this doesn't happen again, or taking the approach of streamlining this whole operation and monitoring it. And then after we accomplish that, we go on to the next issue that we looked at. And so we piecemeal it so that the owner then feels comfortable as to where he's spending his money and on us.
And so, Phil, if somebody's listening on to the call on the replay here, what's the best phone number to get a hold of you? And if they want to send you an email, what's your best email address for them to send something to you at?
My personal email is Phil, Phil, at CPATechs.com. That's CPATECHS.com. Phil at CPATechs.com. The office number is 313-388-0300. Just ask for Phil Schreiber, and they'll put me through, and I'll be glad to chat with you.
Okay, great. Well, Phil, thanks again for taking time out of your schedule to be on the call. We want to thank everybody else for being on the call today and or listening to the replay. Again, if you have a question and you'd like to talk to Phil, get a second opinion, have somebody look over your shoulder, give him a call there at the office, 313-388-0300. Phil, thank you very much.
Thank you.